Welcome to today's market report. European stock held near all-time highs on Wednesday as a host of central bank policymakers pledged to keep monetary policy loose despite recent signs of an uptick in inflation. The Pan-European Stock 600 index rose 0.2%, with gains in travel and leisure stocks offsetting losses in banks. Global stock markets were relieved as US Federal Reserve officials reaffirmed a dovish monetary policy stance after worries about rising inflation led to a bout in market volatility earlier in the month. Similar comments from European Central Bank policymakers, including that it may be too early to discuss tapering of emergency bond purchases, helped equity markets in the region stabilized. The Stock 600 hit a record high on Tuesday after having risen almost 12% this year, helped by strong earnings and optimism over reopening of economies as the pace of COVID-19 vaccination picks up. European stocks, however, are set to hold around or inch just above current record levels as the initial boost fades. A Reuters pool of strategists predicted the Stock 600 would reach 451 points by year-end, just 1.3% above Monday's close. British retailer Marks & Spencer jumped 4.2% to a one-year high after it said it had traded well in the early weeks of the 2021-2022 and that earnings would recover after reporting an 88% slump in full-year profit. French food company Danone slipped 1% after Berenberg downgraded the stock to sell, citing the hard-to-fix low-growth nature of most of its categories. Spire Healthcare Group jumped 24.6% after Australian hospital operator Ramsay Health Care said it would buy British peer for £1 billion. Oil was up on Wednesday as concerns that the possible resumption in Iranian supply would cause a supply glut was offset by strong US crude oil supply data. Brent oil futures inched up 0.1% to $68.56 per barrel. WTI futures inched up 0.03% to $66.09 per barrel. Gold futures was up 0.24% at $1,902.55 per ounce. On the FX front, the GBP-USD pair extends the previous day's consolidation move into the Asian session. The pair is confined in a narrow trading band of 140.140 to 140.160 for the time being. The pair built on the previous day's goodish intraday rebound from the vicinity of the 141 mark and gained strong follow-through traction on Tuesday amid sustained US dollar selling bias. The White House pared down the infrastructure bill to $1.7 trillion from $2.25 trillion and eased fears about runaway inflation in the US. This in turn forced investors to trim their bets for an earlier than anticipated Fed liftoff, which continued acting as a headwind for the greenback. Brexit refuses to die, and with it, the frictions around the Northern Ireland, Portugal. European Commission President Ursula von der Leyen stated there can be no changes to the agreement signed, angering London. UK Prime Minister Boris Johnson's insistence that there will be no customs checks on the Irish Sea contradicts the withdrawal agreement. Both sides still need to settle regulations related to the services sector. Coronavirus cases have been picking up in the UK. Britain had been leading the vaccine drive among large economies and also benefited from the fruits of the effort, quick reopening. However, the fast spread of a variant first identified in the UK has been causing an uptick. While the plans to fully reopen are still on track, the swing higher may further hobble sterling. Some resistance is at the round 142 level. It is followed by 142.20 May's high and then by the 2021 peak of 142.40. Eurodollar is approaching this year's high at 123.49. In the long run, the pair targets 125.56 to 126.19, the 2018 high, the 200-month moving average, and the 55-quarter moving average, according to Commerzbank. There's nothing to indicate that the slide in the dollar has come to an end. Federal Reserve officials have reiterated their message that rising inflation is probably transitory and the economy still has a long way to go. The dollar index was down less than 0.1% at 89.602 after falling as low as 89.533 on Tuesday, its lowest level since 7th of January. Dollar yen was up 0.1% at 108.81. Aussie dollar was at 0.7792. This is today's market news. Thanks for listening. We'll see you next time.